And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. It's June 7th, 2021. Well, story you're about to hear from our good friend John Rubino, dollarcollapse.com, about the potential for a great home housing bust of 2021-22, which would be great timing because I just purchased a home which went up about 15% from the time that I signed the contract to the time I actually closed. So if I wind up even or down a little, so be it. But hey, we'd like to get your opinion. Is there a housing bust coming? Why don't you tell us? KL@kerrylutz.com. That's the email address. So, John, not a secret, you've been in the process of building your home, your dream home. And I don't know how many dream homes this makes, John, but you had a very enlightening conversation with your home builder, and why don't you share that with us?
Yeah, this is my wife's project. She's building this house, and yes, I tried to talk her out of it, and no, nobody listens to me in this family. So she's just doing it, and her builder was over the other day, and so we got a chance to talk, and he has an amazing story to tell. 6 months to a year ago, he was the busiest he's ever been. They had people just lining up to have houses built. And so he took on a lot of projects, maybe more than was wise, but high price projects. He wanted to do them all. And now fast forward to a couple of months ago, and half the projects that he had in the pipeline have either canceled or have put themselves on hold, because the price of raw materials for building a house have gone up so much, and they continue to go up. And so it's blowing through the budgets of all his customers. So now he said he's working just as hard as he was a year ago, but now his days consist of him sitting at a desk calculating how much more a given part of a given project is going to cost, and then going and sitting down with the customer and explaining to them why it's going to cost another $70,000 to build the house. So he's not a happy guy. But what it means to the housing market is inevitable, but still scary, because home prices have been going up parabolically for the last 6 or so months. The house price chart looks like a Bitcoin chart, really just straight up. And that's completely unsustainable for something that the average person has to have a certain amount of income and assets to buy. So what house prices have done in the last couple of years really they've blown through the affordability levels for most of their markets, which is usually the end for a housing boom, because once you get to the point where the average person can't buy the average house anymore, then you either need a bunch of Chinese millionaires coming in, like in Vancouver or someplace, and just buying things up sight unseen, or prices have to stop going up, right? Kind of by definition, when people can't buy the houses anymore. So that's happening on one hand because the price of houses is going up, and on the other hand, because the price of materials to build new houses are going up. So yeah, I think we're pretty close to the end of the housing market. I feel comfortable calling that now, and saying in public that I'm going to start shorting the home builders, because if that's what this guy that I talked to the other day is going through, then you can bet Pulte and Lennar and Toll Brothers are all seeing the same thing happen, right? And they're going to report negative surprises going forward because of that. So I think it's time to short those guys, and probably time, if you're in the market for a house, maybe you want to adjust your expectations in a favorable way. And, I think maybe the time will come soon when a lowball bid actually still makes sense in this market.
Well, one thing I could tell you is that in the housing sector, you're really making a play on commodities, because what is a home? Even in Florida, we don't have that much lumber in our homes. We got generally the concrete block construction, but outside of areas where that's mandated here because of hurricanes more than anything else, and wood tends to rot away in the summer, and termites and bugs. But outside of here, most of the nation's housing stock relies upon lumber, which has quadrupled in price and is added to, I heard estimates, John, of $30,000 to $50,000 per home. jacking up the price. Then you got your copper. Copper is not that big a factor in home construction because the average home, I think, has about 250 pounds. So the price went from 750 to 1200 or something like that. But then every other aspect of home construction, windows, aluminum, steel, houses use a lot of steel. I don't know how much concrete prices have gone up, but energy prices have gone up. So no doubt concrete's getting more expensive. All these things, your home or a home that you buy represents a basket of commodities. So even though you might not know that you're in the commodity speculation business when you're buying a home, because outside of the cost of your land, everything about your home is commodities, except well, even you could even say the labor is a commodity as well. And therefore, when the price of commodities goes up 6-10% a year, the price of housing goes up commensurately. So in case you didn't know it, if you own a home, you're a commodity speculator. If you're buying your home, you're really a commodity speculator. And unless you really understand that, you're kind of at the mercy of the markets.
Yeah, and another story from our house project is my wife sent me over to a paint store a while ago to get some samples. And they said they were out of samples. They no longer had any samples in stock and they didn't know when they were going to get any back. So there is even kind of paint shortages and stuff out there. What a crazy world this is. You'd think after a recessionary year, there would be a surplus of everything, right? Because normally people don't buy as much stuff during recessions. But the government has figured out that, with an unlimited printing press, you can dump enough money into a system so that even during a recession, you can ignite asset bubbles. Oh, and then cars, right? Used car prices. That's another chart that looks like Bitcoin. It's straight up. Used car prices have almost doubled in the last 2 years. Why? Why would that ever happen? Why would used car prices ever double, let alone during a recession? Who knows? It can only be an insane amount of easy money being dumped into the system. So, we have inflation now, Kerry. It's not just stocks, bonds, and real estate anymore. It's kind of across the board.
Yeah, that is a great point. The car thing, I've heard these crazy stories where they're just dying. I mean, I wonder if at the end of my lease, I'll have any equity in the car or not. And they'll give me money to take the car back. That would be it.
You might turn a profit on your cars, something which is unheard of in normal life. Yeah.
Another commodity play. Car. What's car? It's steel, aluminum, petroleum, a bunch of plastic. Actually, most cars are really a play on oil because they're all made with plastic now. 90% of the car is plastic.
So that's how you know when it's real inflation, when your Lexus is worth more for its scrap value than as an actual car. Yeah. Okay, here we are.
All right. Well, hey, it's an interesting phenomena, and we'll see how long it lasts because every boom ends with a bust as we need it. Speaking of shortages, the U.S. Mint about a week ago admitted that there might just be a global shortage of silver. Who would ever think such a thing could happen? I think I thought they could create silver like at will on the COMEX. They just create 1 billion ounces out of thin air, and then the market responds accordingly. But who would think that physical might actually make a difference?
Yeah, the US Mint actually used the term global silver shortage in one of their reports. So we'll see what exactly that means, whether it's just a certain kind of blank that they make a certain kind of coin out of, or if they're actually having trouble getting 1,000-ounce bars to melt down and turn into things. So if you look at coin dealers right now, pull up the page of AppMex or somebody like that, and look at what silver coins cost. The premiums have blown back out again. Remember what was that, a year ago or so when the premiums were crazy? They're back there again. Silver's $28 an ounce, more or less, on spot right now. In other words, the paper market. But if you want to buy a silver eagle, it's $35 or $37, depending on where you go. Those are pretty big premiums. And that implies that the guys selling those coins to you can't get as many as they want, because otherwise they would sell you unlimited coins at $33 and make a huge profit. But since they don't have enough, they'll mark them way up and see who bites. And that's another sign of higher prices coming in the future, right? When things go into shortage, that is usually resolved with prices going up to clear the market. So, here again, we'll see. I don't know. This is precious metals going up is one of the few things that actually would make sense in this world. Houses and cars, they shouldn't be going up, but gold and silver should be. So at least those markets make sense right now. And so, I can comfortably talk to you about silver because at least that's understandable.
Certainly is. Well, we had this rumor that Russia was going to announce a gold-linked ruble and that the BIS talked Putin out of it. The problem with any country backing their currency by with gold, there's a big problem with it, is that that would, in theory at least, become the most sought after currency, because you would no longer need to buy bullion to trust them. That is, you just buy that currency and it would be backed by gold. Like once upon a time, the dollar was as good as gold. Can you imagine if any country actually did back their currency, precious metals? That would, I think it would put an unbelievable strain on that company. They would have a major shortage of money. It would bid up the price of their currency way, way higher, which is good, I guess, on the one hand, except that their exports would become untenable. And then you would have the situation where there'd be a shortage of the currency, because presumably if it's linked to gold, there's only so much of it they could make, just like Bitcoin. And if there's X trillion worth of gold-backed rubles, you could see the market snapping them up really quickly, John, and that could have a really disastrous effect on the Russian economy. But hey, what do I know?
Well, Kerry, you just spelled out the unintended consequence / fatal flaw of fiat currencies, right? It creates this race to the bottom in currency values because no one can have the strong currency because that destroys their export industries. So you always have to weaken your currency compared to your trading partners, who then have to respond by weakening their currency. And so you get steady inflation year after year after year, which is what we've had, until it becomes a rout, which is what we're heading into. So yeah, for China or Russia to back their currencies with gold and then just have a stable currency while all the other currencies in the world are plunging in value, that would create problems for them, but would also give them the world's reserve currencies. So, they could turn around and start behaving like us, creating trillions and trillions of new rubles and yuan and using them to build global military empires. I don't know. There are so many things that when you follow them to their logical conclusions, they kind of blow up in your face. And this is one of those, I just don't know where this all leads.
Gresham's law that bad money pushes out good money, which is exactly what we've had. Even Switzerland was the last country, I believe, to get rid of their precious metal gold linked to the currency, because they couldn't. All their industries, their homegrown industries, were really suffering because the Swiss market's so small, the American market, the EU market's so vast, China, that they couldn't be in a position where they just allowed the Swiss franc to float higher and higher. So they had to kill the link and then devalue. So like you said, the race to the bottom is alive and well.
Well, yeah, the Swiss franc is now linked to the euro, which means it's not a sound form of money anymore. Even though Switzerland has historically been a place where you want to put your money because the Swiss franc is the currency of the world's banking center. But now no more, because they, like you said, they can't handle a too strong currency. So they have no choice but to adopt the behavior of the countries that are destroying their currencies. So now, yeah, even the Swiss franc headed the way of the euro, which is headed the way of the dollar, which is headed off a cliff. So yeah, buy gold.
Well, Peter Schiff always said, what's wrong with having a valuable currency where all your imports prices skid, but But the converse is the export prices get so high, and a company like Nestle, a small fraction of their business is in Switzerland now. They're diversified all over the world, and there are Swiss pharmaceutical companies. So what you would have then is you'd force them to do an inversion and leave Switzerland because it would just be a complete mess. Well, speaking of Switzerland, we got Basel III looming. My guess is it's going to be postponed or watered down. That's the thing that's going to basically end the bullion banks as we know it. The bullion banks supposedly have been on the way out for a decade, John. I think the rumors of their death are greatly exaggerated.
Yeah, I remember predicting the great gold and silver short squeeze that would blow up the bullion banks back in like 2005. So yes, they're still here. And the Basel III thing is, I love the theory that the Russia threatening to back at the ruble with gold is what forced the BIS into promising to actually implement Basel III. So maybe there's some incentive to actually get this done this time. But you're right, if they do it, most people in the gold market think it blows up the paper gold market. And it's the end of this month, right, when it's supposed to happen. So this is a near-term thing if it does happen. And I think either way, it's good for gold because if they don't do it, then that means we're just, that's the last thing that was going to control inflation out there. Then we're just headed off that cliff. And you truly do want to own a lot of physical gold and silver in that environment. But if they do implement Basel III and blow up the paper gold market, you would think that would send the price of gold a lot higher because it would be trading in the physical markets where, the premium on a gold coin represents the real price of gold now and silver. So that would mean higher gold prices. So that would be good too. So, let's let it work out however it works out and just keep on buying gold and silver.
And between APMEX and our good friends over at milesfranklin.com, they've literally had a run on product. And the only way that bullion dealers can survive, John, is by buying contracts on the COMEX. They have to be completely hedged by the end of every day, or any major fluctuation up or down in gold can literally put them out of business. And they don't often, like Andy's open about his hedging activities, but most bullion dealers don't really like to talk about that. I don't know why. It just makes sense because, like a long weekend where we had that silver squeeze and they could be naked 50, 100,000 ounces of silver, and silver does an exponential leap forward, and that could break a bullion dealer. So they have to be hedged most of the time, as much as they possibly can be. So effectively, the premium is what they're living on, and their margins have gotten higher because the actual price of the metals hasn't, but the premiums have effectively made it higher. Am I making any sense there?
Yeah. So two thoughts about that. One is that's a legitimate use for derivatives. Derivatives are not evil per se. They have a function, which is for producers and consumers to be able to hedge themselves so they don't get blown out of the water by sudden price moves. The second thing is that, yes, gold bullion dealers make more money per ounce sold when premiums go up, but that's usually a sign that their inventory is kind of lean and they can't sell as much, so they don't do as much volume. So I don't know whether it evens out or not, whether it's a good, marginally good thing or marginally bad thing when the market is like it is, but it's not this profit blowout for them because yes, they make more money per coin, but they don't sell that many coins because there aren't that many. So I don't think they like it when it's like this. I think they'd rather have a nice liquid market where premiums are reasonable and they can get all the inventory they want, but demand is still okay. That's probably their best market.
For sure. So we had the Biden budget, which is like I remember when budgets were like 100 billion and everyone was all up in arms about it. Now we're up to 6 billion. And basically, it's kind of met with a yawn, John.
six $6 trillion budget. I remember when the economy was $6 trillion, and that it wasn't that long ago, really. Basically, what this means is that governments have completely given up, even paying lip service to the idea that there's a limit to how much they can spend and how much they can borrow. Because remember, the U.S. is spending $6 trillion, but borrowing half of that. So our deficit will be $3 trillion on a $6 trillion budget. And that's Armageddon kind of numbers. We can't keep doing that. We can't even do it once, I don't think, without completely blowing up the global financial system. But these guys, they've been able to do stuff like this for such a long time, but they've concluded that no number is too big and no constituency has to be told no. They will spend whatever it takes to make every single person who might possibly vote for them in the next election happy. And yeah, it'll make those people happy this year. But like we're talking about with inflation, the secondary and tertiary effects of budgets that big will make everybody unhappy pretty soon, except for people who own inflation hedges, who will be, completely happy and maybe even want to vote for the incumbents when this stuff starts playing out.
Man, well, who knows? Who knows? Well, we got a digital euro shaping up, as well as a digital dollar, and we've already got the digital yuan. And Martin Armstrong says it's all so they can track every financial transaction you ever do. They're going to get rid of paper money. I don't know how that's going to go over in gambling casinos, because those places really are meccas, like the remaining center of where cash transactions really flow.
Yeah, I agree that digital currencies will let governments track everything we do financially, and bring us that much closer to a Chinese-style social credit system. Because we already kind of sort of have one with social media companies, right? Keeping track of what you say and punishing you if you deviate from the conventional wisdom as dictated by major corporations and the government that's in power at any given time. So now add in that they can not only track what you say online, but they can track what you spend everywhere, and they pretty much got you, right? There's nowhere to hide then. So we're getting to the point where what we would think of as a dictatorship is being put in place in kind of a soft way. It's for your own good. We're protecting you. We're giving you more convenience, stuff like that, and we're accepting it to an extent. And by the time we realize that it's not really for our own good, it's going to be too late, I'm afraid.
Hey, well, that's where your precious metals will come in. They'll probably ban it. They don't have to confiscate it. They just have to put in windfall profit taxes, much like they're doing with cryptos. And it's funny because we have the Miami Crypto Bitcoin 2021 conference, and the chart for Bitcoin looks so similar to the chart in 2017 when we had the last big Miami Bitcoin conference in December of 2017. And here, the chart, the parabolic rise, exponential rise, and then the big blow off top that we saw this time. Maybe it's a little ahead of where it was in 2017, but this is the kind of thing that makes the average person nervous about cryptos, John.
Yeah, cryptos are an emerging asset class that doesn't really have a complete personality yet. We still don't know what it is, what Bitcoin is, and what Ethereum will turn out to be, and what role they'll play in the future of the financial markets. So, because of that, they trade on emotion. And when people are excited, Bitcoin can go through the roof. And when people are depressed, it can plunge. I've got some bids in at $10,000 on Bitcoin. So we'll see, and it could get there. But then the question is, what will it do after that?
I was ready to write my second paper that was a continuation of the one in December of 2017, where I said, you sell half your Bitcoin. Just sell it because it's going to infinity. Everyone knows it. And look, just because it's going down now doesn't mean I don't believe that it's going to eventually break 100,000. I mean, I can see it coming back after a 6-month hiatus, John. I think that Bitcoin has had 7 crashes since it was came into the public perception, and each time it's crashed, but each time it's recovered, it's made a higher high. But right now, it's making a bearish pattern rather, because it's making lower highs and lower lows. I mean, that's the very definition of a bearish pattern. But nobody wants to listen, so just hold on to your cryptos and see what happens next. We got a Peruvian government change in the offing. The socialists look like they eked it out. Will that affect mining? My honest opinion, John, is it's all about the money. Just pay us 13% or 15% instead of 10, and we'll let you go on with your project. We know that they know they can't nationalize because they'll wind up with zero. That's what inevitably happens. Plus, there's all sorts of treaties in effect now for expropriations. Might take 10 years, but eventually they wind up paying a lot more for expropriations than they benefit. This is just a money grab, in my opinion. What are your thoughts?
I think it's very complicated because the colonial legacy of Latin America is that a handful of rich families tend to own pretty much everything. So you get this cycle of, the peasants revolting and taking over, kicking that group of rich people out. But then because opposing what they see as capitalism and imperialism, they adopt Marxism. Their government, the revolutionary government, fails miserably, and you get a military coup which installs a handful of rich people in charge of everything again, and the cycle keeps repeating. And it's this huge tragedy because Latin America is resource rich. Those could be very, very successful countries if they could, just find that middle ground where the wealth is spread around and regular people benefit from progress. And elections are clean, et cetera, and it's very hard for them to do that because they keep swinging from one ideological part of the spectrum to the other without many stops in between. And so, if they like Marxists in Peru, maybe that's the same thing again. I think that a country should be able to nationalize its assets if it wants to. It owns its oil and its coal and its gold and everything. And if it needs to rewrite contracts, it has the sovereign right to do that. And the U.S. should not be sending the CIA in to foment revolution when a little country does something like that. But I don't think that a Marxist government in Peru is going to be any more successful than a Marxist government anywhere else. So it looks like a continued mess down there, which shouldn't be a surprise because it's a continued mess pretty much everywhere. If the U.S. and Japan and Europe are going to fall off a financial cliff, there's no reason to think that Latin America isn't going to follow us in some way.
Oh yeah, well, it's one world. It's one wonderful kumbaya, and we all go up together and we all go down together. And I don't think anything's going to change that. But like I say, higher taxes. It's whether you elect socialists in the U.S., you're going to get higher taxes. You elect socialists any place, you're going to get higher taxes. Ideology aside, I don't believe that any of it. It's all about economics. And speaking of economics, record consumer credit overall, we're up to an all-time high in April of $4.238 trillion, John. Can we get to 10? I mean, because it used to be when we hit a trillion, that me and you perhaps was the definition of a bubble. But maybe we need to hit 10 trillion now because of inflation and because there's so much money out there. So we don't need to worry about it.
Kerry, there's no limit on anything anymore. The government's going to borrow as much as it wants to, and people are going to borrow as much as they want until it all blows up. So this really does feel like the blow-off stage of the craziest financial cycle that's ever existed. So in at least in that sense, in the entertainment sense, this is really interesting and something that we'll look back on after we live through it as a really fascinating thing. But I don't think it's going to be fun for virtually anybody who lives through it. You know, these consumers who owe $4 trillion now, they have to pay that back no matter what, whether their jobs are still there or not.
Yeah, I want to see the all the people turning in their flat screens that they finance through their credit card at various retailers, and now they're going to return them. And I think we're going to be living through an episode of South Park where they've securitized all of those big screen, those flat screen TVs. So, you know, it's all part of some securitized debt out obligation that's not on anybody's books, but is enough to bring down the entire banking system when it blows up. And they'll, you know, you'll be able to get a great deal on a flat screen TV. So if that's your thing, why, just wait. How many flat screens is enough? And when do you stop buying them? When do you stop upgrading? Because they've always got the newest, latest, greatest, and they don't seem to go up in price. But in any event, maybe we'll be on a flat panel television standard. We'll just back our currency with it, right? Like the rent mark in Germany was on real estate. We'll just do the flat screen LED dollar, I think it'll be called. It'll just be backed up by flat screens, right?
Yeah, that could well be.
Well, that is it for now. Make sure you go over to John's site, dollarcollapse.com, sign up for his free newsletter. Any questions for John, just email us or put it up there in the YouTube comments. My address, kl@kerrylutz.com. Go over to Financial Survival Network, sign up for our newsletter as well. John, that's it for this week. We'll see what happens next.
Thanks, Kerry. See ya.